What is up, TCT trading community? We're back with the lives. Happy to see all of you guys already in the chat, even before we were going actually live. We're back at it. We're fresh. We're re energized, ready to spill the alpha for you guys regarding what is the next move for Bitcoin. We've been going up pretty aggressively. We've been talking about this expansion. It's a completely normal expansion. And in my opinion, it's an expansion that is still also fueled by institutional involvement because it's basically the release that we were expecting from this macro reaccumulation schematic. Okay. In my opinion, this is not a retail push at all, just an institutional push because it shows that they're ready to bid prices at these levels, or they're ready to bid Bitcoin at these levels, which is very significant. So, hope everyone is doing amazing on this Tuesday. Hope you guys absolutely nailed it today behind the charts during London and New York. We certainly did. I personally hit a crazy take profit on Euro USD just now. I made a post about this, but absolutely been nailing it. Currently sitting in a Pepe long that we discussed on stream during New York Open. Absolutely beautiful Model 2 accumulation that we will be going into in a minute. Now we're letting everyone join. Let me name some people in the chat. We got J Money, as always, Frequencia, Tasty, Crypto 420, all familiar names, guys. Jessa, Tommy G, Victor, which is a new name. I haven't seen Victor that much. Creed, Sofia Suarez, good night.
Sophia in the chat. How's
Sophia in the
attention
chat.
going? How's attention going?
Poloski, hello kings. Oh, they're calling us kings. They're calling
Let's
us
go.
kings.
How are we feeling, guys? Bitcoin is pumping, but I see a lot of fear. Also, some friends are texting me, is Dogecoin a good buy right now? So it's getting hot. It's definitely getting hot.
It's slowly heating up. I personally also have some other friends that are not that experienced, but they do hold crypto, and they diamond hand Bitcoin, and a few actually sold sold some of their profits at around 80K because that's a rule that they made with themselves. But I just know since they're not experienced, they're gonna regret that rule later on. So. Hope everyone is doing absolutely amazing. We're just gonna jump straight into the price action because we got no time to waste. Okay, we're gonna just have a normal hour to hour and a half stream. No 2.5 hours this time until Wyckoff, or unless Wyckoff Insider starts to spit some absolute crazy alpha. But looking at my chart, we can see the Bitcoin price action on the weekly time frame. And I have since today been talking about this POY that I'm watching for a potential harder rejection, which is going to be around that 94K area. Now, what exactly is that 94K area? It's based on mainly two things. We got this, and yes, guys, I have a trend line on my chart. You will not see me have a trend line very often unless we're in price discovery and we can't use supply. Okay, so you're seeing I'm having this type of trend line from the previous two tops on my chart that's kind of going in this diagonal formation, hovering around that 94K-ish area. And then when we combine that with our trend-based fib extensions, we get a very significant POY. So what is exactly a trend-based fib extensions? Well, what a trend-based fib extension is that when we are trending up and we're making higher lows and higher highs, you can pull your trend-based fib extension from the pivot point low to your swing high and pull it down to that new higher low. Okay, I'm going to turn on the trend line so it's visible for you guys. So you pull it from your pivot point low to your pivot point high to the potential higher low. And then when price is coming up, you get different types of fibs. You can pull on the 1.618, the 2.618, the 3.618, for example. and you got different price points as to where the second expansion may end up rejecting from. Okay. Personally, I love to use the one to one. Many other great traders use the one to one. I did not come up with that, and it's something that works extremely well and oftentimes gives great reactions. So when I apply that theory and when I apply that what I just taught you guys to the chart, we can see that we were trending up, making higher lows and higher highs, just like this. And if we add our most recent trend-based fib extension to that high all the way to the low, you can see at that 93.928 level, that's exactly where that one-to-one fib extension is currently resting. So that is kind of my reason as to why I am watching a rejection from that level. At the same time, it's also in line with just front running that 100K. I've made it like this box where a lot of people will watch 100K and you just get that reaction right before it. So I'm definitely having my eyes on this red box 100%. Okay. It's not that I'm only focused on shorts. No, I'm actually in a long at the moment, but we have to be aware as to where price could potentially reject. Because what you will see once you're in price discovery is that, let's say you have many distributions like this, but they end up failing, right? You see many distributions like this and they just go higher, where you thought you had a model 2 distribution, it fails and it actually just mitigates demand and it goes higher because you're in the short squeeze. Same over here. You'll see it all over the place when you're in a very aggressive uptrend. But then the moment you actually hit that POI and you hit that point of significance, okay, that's where you can expect for your distribution to actually complete itself. And that's when we can benefit off that move just by simply understanding that we are in an area where actually we can trade a proper distribution. So that's why I have it on my chart, looking for a potential hedge if we do come up there. But if we do come up there, and preferably it's kind of after this week, I would love this candle to just close very bullish, okay, very aggressively. Expectational order flow, in my opinion, is and will be a higher low for a higher high. And then looking at this range, obviously, the people in the Discord know that I preach it all the time. When you have massive, massive range demand getting overlapped with structure demand right at the topping point of that macro range demand, that I absolutely love those POIs. Like if we're ever going to come back to this 73.666 area, that will be a generational long opportunity. But just because it's such an easy POI to watch, I don't think we're actually going to get there. It will be around a 19% rejection in order to get towards that POI if you reject from the bottom of that box. But I wouldn't be surprised if we come up in that supply, kind of get a rejection from here, and then just halfway in this inefficiency at this place where not that many people will be expecting it, just a secret little hidden level will actually get that higher low for the higher high. So that's kind of my expectation going forward now. But as always, we preach it all the time. We do not trade our expectations, we trade our confirmations, which will be more clear after we have more data. Now, coming back to that pump, personally, everything that's going on right in here and right now is still institutional involvement. Okay. The fact that, market makers are willing to make price close above our previous all-time high and pump this hard on significant volume, it shows that they are ready to bid Bitcoin at these prices. Okay. They're ready for Bitcoin to come higher, to bid Bitcoin at these prices, also pushing it higher. Therefore, it's pretty healthy, in my opinion, that we're coming up the way that we're coming up. It's not overextended. It's not a bull trap. It's not a fake out. It's way too deep in order for that to be any of those things. Okay. If we're going to have a fake out, we should have stayed in that deviation threshold zone. That if I put that on my chart right here, we should have stayed in this zone for the manipulation and then for the reversal back down. So The whole deviation idea and the whole fake out and the whole bootstrap is long gone, in my opinion. And now we simply need to look at, okay, where can we potentially expect a rejection on the higher time frame to find that nice head short to take into a long for the higher low. And from there, I do think on that higher low, we'll see some sort of a significant accumulation, pushing price higher, deeper into price discovery. And then from there, I think the hands will slowly shift from institutional involvement to retail involvement. And when that shift starts to happen, that's when it is the beginning of the end. But for now, that's talking way in advance. We're watching our local confirmations. And for the people that are in the Discord, they should be very long. They should be very long because there were multiple trading opportunities. So this morning, we actually had a model 2 distribution schematic right here with our 1, with our 2, with our 3 that I personally did not trade. Okay, I personally did not trade this distribution because it wasn't a high probability setup and our third tab wasn't technically valid. So if I'm going to short anywhere near or anywhere close to not being at my POI and deeply in price discovery, it needs to be an A plus setup, which it simply wasn't, right? Now we did came at that 90K area, which is an absolutely amazing psychological level. But from there, we went down. And I see many people already talk about that harsh rejection. And hey, is that 94K idea of yours still valid? Because we're already seeing a rejection. Guys, I have been talking about having a consistent move up. A consistent move up towards that 94K does not mean just one massive bullish green candle straight to 94 and then a rejection. A consistent move up simply means that you do not break your high time frame structure back to bearish. Well, before this pullback, we didn't even have structure. The structure on the 2 hour was a higher low for a higher high and higher low, or higher high, higher low, and then just straight one higher high. You didn't even have structure in this entire move up, which was 20%. 20% on the $1 trillion asset class. It's absolutely nuts. So no, the idea is still valid of that 94K. This was simply just a pullback to literally create structure because we didn't even have structure. So what happened is that we hit the target of that local distribution, but instead of having follow through, we can see that this local distribution immediately went over into an accumulation model that we were talking about on today's New York Open stream. Now, initially, I wasn't that hyped about this 1, this 2, and this 3 right here. And the reason for that was because we still had demand right here, which I would have loved for it to mitigate this demand zone. And if you look at my second tab low, right? If you look at my second tab low, this is a very bad low. Like this low has no candles towards the downside. So I would love for price to actually come down, take out that low for the Model 1 into demand. But price said fuck it. And what it did was literally grab the extreme liquidity on the 30-second time frame right here and then move back up again after breaking structure. So I wasn't that hyped about this Model 2 in the beginning, but then once you see price start to develop more and we actually come down in this structured fashion, coming back into unmitigated market maker demand because it's an order block backed by this Model 2 accumulation, that's when things start to get more and more juicy. Okay. And then you could have tried it along on this break of structure. But what I did instead is actually find the long on altcoin, which will probably outperform Bitcoin if we're going to go up, which is Pepe. So we managed to catch the exact trade on Bitcoin, but then on Pepe, which was absolutely like 10 times nicer. You see the Model 2 accumulation, you saw the break of structure, exact same model, same setup, just a different pair. Found the entry, 4.3 risk to reward. Absolutely incredible. I took it higher risk. I even added going up in case we were going to go into a very extended move. So currently the stop loss entry, you can see it here, or the average entry price is 12714 because I added. So 12714 will be right here. And currently my stop loss is at entry. I took take profit at the range high, leaving the restaurant for higher. And you can see the entry confirmation here. And then we shared it in the Discord server where I said from stream because it was also prepared on stream. So we are prepared. Bags are packed. You know, either you sat on your ass all day and you just waited for Bitcoin to hopefully start its move up again, kind of stress what happened, where you could have simply traded distribution and accumulation and actually made money to reinvest more to get even more amounts of tokens on this second leg up. So very curious as to where price is going to get us on this move up, where we will be rejecting. I'll be having my eyes on 94, and we're going to wait for our confirmation. So curious what your intake is on that 94K level, Wyckoff Insider. A few people, a few other great traders are also talking about it. So
Yeah, so I actually like the level, not because of the trend line. I just cannot use it. I don't know. But like it's just before 100K, you know. And a lot of people, when we are approaching like 94, 95K, a lot of people will watch like the 100K level. So maybe we can even go above the line you had on your chart. Let me see.
I
What
can
did you
grab
do?
it here. I can grab it for you. Um, this is the block that I have on my chart right now.
I like it.
It's
Mm.
nice. It's like let's say we have this line, right? You can even see this line as like I don't know a resistance line or like from a range high, and you just have that you know that manipulation here above it before coming back down. Because you have to think like this, okay? You have to think like this. 100K is a milestone, which is, in my opinion, from all the milestones that we have had on Bitcoin, the last, I would say 10 years, I think 100K is the biggest. You know, personally, I wasn't in Bitcoin before we were at like 5K, and there must have been milestones for 10K, 20K, you know, but 100K is just insane, right? 100K is, in my opinion, one of the biggest milestones. And we have been pumping extremely hard, right? We have been pumping extremely hard, which was expected. But to just pump immediately on the high time frame to that 100K area before or without some just tiny manipulation to squeeze out some leverage longs, I think it will be very generous of the market in order to do that, right? So it's just an expectation. We're going to see. We're going to get the confirmation to short it, which would be nice. But in my opinion, it's just like it would be very funny because you just have to imagine the headlines. Bitcoin approaching 100K, right? Bitcoin 94, 95, 96. People starting to long, getting nervous. 100K Bitcoin. What? Randomly starting to long altcoins because Bitcoin is going up. And then, boom, rejection, liquidation, flush, open interest reset. You know, it wouldn't be the
Mm.
first time happening. It wouldn't be the first time happening.
I also saw like that today, or yeah, there were a lot of liquidations, right? Like one, I saw
Yeah,
something on Twitter
I made a funny post. Like you know how we like to make those posts. It's where we
about the
check the volume
volume.
spikes.
Yeah.
Yeah, when we check the volume spikes. So what you can see right here is we absolutely love to joke about it, but it's when we're looking at, and this is just a quick little alpha, okay, quick little alpha from purely a day trading perspective as well. We were talking about this range, right? And the people that have watched the mentorship or the people that are studying the TCT schematics, they know about ranges and they know also what the purpose of a range deviation is. Okay, a range deviation, the purpose of it is for a market maker to fill their positions, and a market maker fills their positions on a range high deviation because of two main things: people that are breakout longing the range high, so people that are approaching the high and they start to break out long in this area, and people that are longing or people that actually shorted in this move down right here, okay, or they shorted just somewhere in this range, doesn't matter, just here or here or here or here, and they put their stop loss above the previous swing point, which is the range high. That's literally exactly what's going on. If people short in this move down, they'll put their stop loss above that's a swing point. If people short this move down, they'll put their stop loss above this swing point. And if you check the order book, guys, they're literally always buyers and sellers. So even if you think, why would you short in this area? Trust me, someone will have a TA combination of an EMA combination and crossover where their divergence is saying that they should short. Like it's literally it's what's going on. So there are stop losses resting above that high. And then if you're short and your stop loss gets triggered, that causes a buy order. So if a market maker wants to dump price, he uses your buy order to fill his sell order. So your stop loss liquidation, right? That causes a buy trigger for them to fill their positions. And obviously, if you're a breakout longer, your buy order manages to fill their sell orders. So what we actually can see right now is that there were a lot of people buying, a lot of people buying here, right? A lot of people buying here, and you can base that on the volume spike that you see. So I want to make it a bit thicker here. You can see a lot of people buying on that move up because there is a lot of high volume spikes. Okay, and we're on the 5 minute now. So we got high volume spikes coming towards that high. Now, price is actually coming down, but I'm not really seeing the same selling volume spike. So in my opinion, these people probably kept their stop loss below the previous swing point and never got taken out. Okay, they never got taken out. Price then continues to go up. They're kind of at break even. And then look what happens once you have your deviation. So we call the tap two, but people that don't understand TCT concepts will break out long. And you can see the moment we start to deviate that high, we see a massive spike in buying volume. So you literally have people that are longing the breakouts. They're longing at this top, they're longing at this top. Because why is there not a volume spike at these lows? Why are there no volume spikes here or here? Why is the selling volume higher here? Why is the selling volume higher here? It's because people don't buy bottoms. They sell bottoms and they buy tops, right? And you can see it in the chart without even using any external software program. So when I see this and when I see a deviation, okay, when I see a deviation on this massive volume spike, and then you get that break of structure back inside your range, kind of confirming that you're going to come down towards that range low because you did have some sort of a distribution. It wasn't just technically valid. And I like to stick to the rules, but I was expecting a move down. I also posted that in my channel, but I was expecting a move down. The thing is, when we are going down in this bit of price action, right? So in this move right here, when we are moving down, the reason why I am so confident in that this move down is not over yet and that we're actually going lower is because in this move down, there is no massive volume spike that's bearish, meaning the people that longed in this point right here and in that point right here, okay, the people that longed in that point, they haven't been liquidated because there's not a selling spike that equals the size of the two buying spikes that we have had. And assuming as to where they put their stop loss, we know that these longers probably put it above this swing point, and these longers probably put it above the other swing point, which will be at that point in time right here. So when price is coming down, I just know, okay, we have a short confirmation here. There are trap traders in that top, kind of confirming your Model 2 distribution idea from a market maker perspective. Because why is price coming down in the first place when you have people market order longing? Because short limits are getting filled. That's literally the way it is. Short limits are getting filled. You get the break of structure here. You see the break of structure on higher volume right there at the bottom, indicating that now, since they have filled their limit orders, they're ready to push price down with a market order. And then in this move down, I will not get stressed when if for price to reverse here because we haven't seen the flush. And guess where the flush happened? I want to keep this the exact same so it's all nice, but guess where the flush happened, guys? The moment we start taking these two swing points I was previously talking about, we can see this massive spike in selling volume, aka the people that longed here have all been stopped out. And now it's time to play the exact same thing, but in reverse. Now it's time to play the exact same thing, but in reverse from an accumulation standpoint, right? Where now they're starting to accumulate to go higher. But do you see what they are doing? I'm showing it you right here. People oftentimes have a hard time understanding the theory behind everything. I'm explaining the theory right now in a live training environment, just showing you the volume. Okay? Just showing you the volume. Trust me, a market maker is not buying at the range highs. This is not a market maker buy order. It's not a market maker buy order. No, this sell actually confirming the distribution. That's when they're ready to push price down into those liquidation prices that they have all the data for. And then once those are met, why do you think that after all the longs were liquidated, right? Why do you think that after all the longs were liquidated on this massive volume spike right here, we get a volume spike twice the size almost right after it? Because what they did is they flipped the script, okay? They flipped the script, and now they're actually using all these liquidations that cause a sell trigger. Because just like when you are longing here, okay, or just when you're shorting here and your stop loss gets hit and that causes a buy trigger, the same way if you get stopped out, that causes a sell trigger. And they use all those sell orders from all these liquidations to start their accumulation model. And guess what happens? You get your tap one, and your tap one is created after liquidating all these people on the left, and then you get your tap two. And guess what? On tap two, you have a spike in selling volume. But why are people selling at the range low? Because probably those people were trying to buy at the range highs. Guys, I'm not making this shit up. The people that bought here, where do they put their stop loss? Below the swing point. Like, just because you guys follow the right people and understand TCT concept doesn't mean that everyone does, right? It doesn't mean that everyone does. This is the way it goes. They buy here. You see the tiny volume spike. They put their stop loss below the swing point. They get stopped out on the deviation. You can see almost the exact same selling volume spike, but we have a selling volume spike, but price is going up. How is that possible? Because the market makers uses the market sell orders to fill his limit longs. And now we're moving up higher. And they're probably taking some profits now from the accumulation. Is they do this the entire day, all day, in every market, and you get absolutely wrecked, and they are absolutely killing it. And if you just understand and take the time to study TCT schematics, which is literally following the footprints of the market makers on the chart, no matter the time frame, any asset you can actually trade, because you would short there and you would long here as the safer play, but you could also, technically speaking, long there. That's how you could have nilled today. This was today's price action. This was it. The day started right here. Day started right here. Boom. Today was literally a distribution into an accumulation. You could have nailed it back to back. Done. You could have made 5+% easily. Be done for the week. Just understanding a model 2 distribution and the exact same model, but then an accumulation, right? But I'm showing it you here right now. If you're having trouble understanding how they operate, or just the theory behind it, yes, there are actually people longing here. There are actually people shorting here. Just because you're following the right people now and you're starting to see the bigger picture doesn't mean that's the case for everyone, right? Besides that, there are a lot of algorithms. People have a lot of bots running on, for example, Bybit. It's very easy to incorporate an API thing with your bot to just start trading, and that bot just has buy and sell orders all the time, which also fills the order book with orders in order to actually trade. So there are people selling and buying here, and they put most of the time their stop losses below those swing points, and that's why in the liquidation lectures in the mentorship I talk about what the key liquidity points are: range highs and lows and market structure highs and lows, because those are the swing points, and people actually put their stop losses at swing points. We also do it, we just do it at the right time, right, where price will not come back before moving in your desired direction, ticking you out. So it's just a quick little introduction into what actually goes on behind the scenes when we are trading TCT schematics. It's not just ABC on the chart. It's not just okay, when all the confirmations are met regarding these random things of a trend line bounce and an EMA crossover and this and that. No, it's just literally eliminating trading or eliminating all the nonsense out there, even though it might work. Just eliminating all the bullshit and going to the actual fundamentals as to why the market moves. And that's buy orders and sell orders. And when supply is greater than demand, you go down. And when demand is greater than supply, you go up. So that's why I love TCT schematics, because, and just TCT trading, because it's literally, why price is bouncing. Price isn't bouncing because you had an EMA crossover, you had a MACD divergence, you name it. Price is bouncing because the market maker is buying there, and only a market maker can move price. So it truly helped. It changed my life regarding trading, right? So I'm just showing you as to what price actually does and why it does it, just by showing you today's price action.
It's crazy. Those market makers are bad guys.
Yeah, they're not they're it's they're genius, right? They're just smart. Literally, the market makers are just smart. And if you are smart, you try and figure out and follow their footprints. Why are you trying to trade against them, right? Why? Like, yes, they're technically speaking bad guys, but the other people are just stupid. You just it, don't long the breakout. Look at it from a deviation standpoint. And I swear we have 650 people watching, okay? We have 650 people watching. Guys, I'm telling you right now, if you go to my channel on YouTube, okay, the link is in my bio. If you go to my TCT mentorship at playlist and you press on play and you have to watch everything, preferably in chronological order. But you go to this liquidity lecture, I'm telling you, I'm telling you, a whole new world opens up. A whole new world is going to open up where you are going to look at price action from a completely different perspective. Like, I just pressed a random point in the chart and you literally see me talk about the deviation. Grab all buy side liquidity, Mr. Market Maker, fill all short positions. Like, it's all explained in here for free. So start taking action. Okay, start taking action. I'm gonna give you the mic, brother.
Yes, yes, yes. So I have a nice factual. Or are you still on the screen?
Fractal. Yeah, I'm gonna show
Fractal.
you. Boom.
So yeah, on the chart I have Dogecoin and I have Bitcoin, and Dogecoin is basically our main meme coin. So yeah, it's the alpha play. So if you are invested in meme coins, you want Doge to move first heavy. Now that's exactly what we are doing. So zooming in here locally, we had this nice market maker accumulation. So we got to push up, and from here to here, you're downtrending. When you're downtrending, you pull your range from low to high. Now you got the TCT Model 2 schematic right here. And yeah, literally picture perfect. And now, yeah, you see
Bro, I
what
want
is
you to
happening.
zoom in. I want you to zoom in on your second LPS, bro. Because I remember that because we actually traded it, but we took the Bitcoin trade and not the Doge trade. And Bitcoin made that lower low. Yeah, look at that. You're seeing it on the left. On the left of your pink arrow, you see that Model 2 or Model 1 even going over the Model 2. So we
Damn.
traded that on Bitcoin, but that Bitcoin ended up making a lower low where Doge later on ended up making a higher low, never stopping you out. But just measure because we kept our stop loss the same on Bitcoin. Just if you find an entry, I think it was even a Model 2. So you had like a Model 2 in your last tap of the Model 2. It was crazy, bro. It was crazy.
Oh, yeah, right
So
here.
yeah, yeah. So you had the Model 1 flowing over in the Model 2, where that third tap of the Model 2 perspective also had its own little model, and then you can just enter on that break. But bro, that entry never got stopped out. Like that was the generational entry that we were watching on Bitcoin, but the Bitcoin had one more sweep of the lows, unfortunately, later on. But you, bro,
Damn.
is absolutely nasty. It's just the fact that you have this macro accumulation model, and just by understanding high time frame and low time frame, I think this is like a what is it, a 50 RR setup? This must be 50, bro.
If we,
Can you put that
let
on
me
your chart? If you enter on the break,
right here.
yeah, I would do there, yeah, there, yeah. And put your stop below that low. At least 25.
Bro, this shit is
Holy
high. Damn. This shit is
yo!
high.
72?
72.
So
Bro.
just by understanding that you can have an accumulation model within an accumulation model, you're able to nail a 72 RR trade. That's
And
disgusting.
and these are like the setups where yeah, that you are waiting for months, and yeah, then you just miss them. Fuck.
Yeah, and then we missed it.
Oh,
Then we missed
oh.
it. But it just shows the
No.
possibility of like it's like I want people to understand why we are pumping. Yes, it's a very exceptional pump. It's an extra pump, but there's a reason why we are pumping. It's because they packed their bags so incredibly clean that there was nothing left than to just go up because it's like a massive supply shock. It's just a massive supply shock.
Yeah, it's crazy how hard this thing is pumping. So yeah, this is like locally zoomed in. So the market makers they scaled nice in. And if we go take a look at past cycles, so this is your first cycle where you break the all-time high. This is your second cycle, and this is your third one. You see, we have every time the same. So you have a breakup, and you leave market maker demand behind. You get the retest, boom. So same shit, boom, retest, go up. So right now we have the same. And yeah, last two times we made a higher high. So yeah, it's gonna happen again because this is just pure data. Also with Elon Musk now in the office with Trump, yeah, this is gonna perform insanely nice. But it's just yeah. So Doge is not done. So we are not done for this cycle. It's just the beginning. Don't get too scared that your best friend is buying. Uh, yeah, it's just the beginning. Yeah, focus on our exit triggers. When are we going to exit the market? What do we want to see? Because having random targets, for example, I want my portfolio to hit this amount and then I exit. That's not good to do. That's one thing I can say. Mm.
Yeah, it's gonna be too
So
emotional in that case, right? It's gonna be too emotional. But people need to understand that you have Doge, and Doge just pumped like 300%, being a $1 billion asset class. And it's like, how much liquidity it takes to pump a token that big, that hard. And it is a meme. So, in my opinion, it just represents just like when Bitcoin pumps, the amount of liquidity that flows into Bitcoin and goes up as $1 trillion asset class, and how much liquidity needs to be added to move that. Bro, Doge kind of represents our meme coin sector, right? If you can add fucking 20 billion in market cap on Doge, on this pump, just imagine what you can do when that money starts to rotate into your 10 mil market cap projects, bro.
Bro, that's going to get crazy. So yeah, the moment people decide, like the big boys decide to take profit on Doge, that's when the real rotations will happen, and we
I
are
think
ready
it's
for it.
just I think it's just so like we were already bullish on memes as this cycle's main narrative, but Doge pumping, in my opinion, is like an even greater confirmation to stabilize the fact that memes are here to stay and that your low cap meme coins can go absolutely nuclear because Doge represents our meme space, and the fact that Bitcoin is pumping, and it might, I think this is one of the greatest pumps in the billion-dollar asset class so far. That like the fact that Doge immediately goes nuclear when Bitcoin gives massive green lights, it just shows that it's literally just waiting. It's waiting for the money to rotate and then for the entire meme coin sector to go parabolic.
Yeah, I also see like something nice on WIF. So WIF is of course our main Solana meme. Nah, so right here you had a nice distribution. You did go down. You had a redistribution, initial range low, initial range high, some nice manipulation, and then we came down, but we never swept our initial range low. So this is our initial range low, initial range high, and we deviated the high, but we did not have like a crazy accumulation right here. So that's why I was like the whole time bearish on WIF, and then we did come up. We came to our main market structure. So this is our main market structure in that time. So we did come up to our market structure high, and we swing filled it, and we started to distribute again. So that's where we in the TCT community became really bearish on WIF. But yeah, we also know that you can have distributions into accumulations, and that's exactly what happened. So this is our initial range low. We swept it, and right here you have the TCT Model 2 schematic. It isn't accumulation schematic. It was just not tradable because yeah, this this backtest did not
Bro,
hit
it's
extreme
nasty.
demand.
It's nasty, bro. It's so, bro. You don't understand the long setup that I shared. Um,
On WIF?
I wanna. You can finish, by the way, and I'm gonna show you. I'm gonna
No,
prepare the
no,
long setup if you want.
you can show
Okay,
it.
okay, okay. So let me take the screen back for a moment, bro. The setup that I shared on with, you literally had equal lows, bro. I think you had equal lows there. So right here with USDT, it's not even funny. Like I almost cried here. Oh, you did? Yeah, here. So I was watching just like you had, right? I wanted a deeper mitigation, preferably of this 18-hour block. I already knew it was just too good to be true, right? But I had to put it on there in case we were going to reject here for the lower high and then put this in and then boom, pump. I just knew it was too good to be true. And I also learned from it because I've seen a lot of projects have that actual distribution effect just to have like a tiny manipulation below the low and then just to reverse. So I noted that down for personal trading as well for the next time it happens because that's how we learn, that's how we evolve. But I always preach we don't have to catch the high time frame entry. We don't have to catch the exact pivot points of the move in order to make a lot of money. So what I was watching is when we were stalling in here, I was watching this range, right? I was watching this range, and you had that range low, and you got that deviation one, and I was watching for the sweep of the liquidity right here, boom, which was your first market structure that was, or the first market structure low that was created of that deviation that actually came into this demand, which was extremely nice here. You came into this demand, and then that was even back tested by that high. So it's a beautiful little demand POI below that low. And I had an alert, bro. I had an alert on the equal low that just never got triggered because we never swept it, and we put in equal lows, and then we broke structure right here back to bullish. So let's say price swept the low right here, that would have been the most easiest long you're gonna
Oh,
get, right? This would have been the most easiest long ever. And I had an alert there, but the alert never got triggered because the fact that we put in equal lows, I would have just tried it. Okay. I would have just tried it. Because I was like, okay, you're either losing 1% or or you have a generational entry. Because this would have been the entry, and then you're chilling right here. Like this is already 20 RR. So I was like, there's no way. Because I want people to understand they don't have to catch the exact pivot points. You can catch great entries along the way. And then Price did me this dirty. Like they did me this dirty. Because I literally shared this. I literally shared the setup of doing this. Sweeping that low, breaking it back to bullish right here. And then we put in equal lows. I was
it's
like,
so nasty
no way.
sometimes, but yeah.
Because then you kind of forget about your own setup because you just have the alert there. And then you kind of scroll through your watch list and you're like, wait, hold up, wait a minute. Something ain't right. And then you're like, did I just miss this? Just to figure out that we actually did this. Nasty.
Ah, so
Nasty, nasty, nasty. But yeah, it does represent just the soul community.
yeah, it's like it is so nasty how they do it. So they didn't create a valid accumulation right here. Then they create the distribution. Now everyone on Twitter, yeah, even me, was becoming really bearish on this meme. And then there's so much selling pressure in these lows, so they don't need like a proper accumulation schematic. They can fill enough right here. So that's also how that is working. There was so much selling pressure, they didn't need this extra demand or liquidity to fill more. Yeah, right now we are looking really good, I think. What are your thoughts about on this chart, how it
Yeah.
can translate?
So another thing I've noticed, and I think a lot of people can learn a lot from. Am I on the screen? I'm gonna add myself. Yeah. So, and I think a lot of people can learn a lot from, especially people that trade TCT concepts, is that you were talking about this move going down with the lower highs and the lower lows, and then how you kind of had this newly formed range right here that deviated the high and then never took the low, so never having a proper accumulation model. I think we can learn a lot from the fact that even though we never had an accumulation model, you were 100% convinced, just like me, we were 100% convinced that BTC was not going to come lower than this point, right? The moment we had that move down and we saw the bounce off this demand zone, the only reason why we said at the time that price could potentially take out the low one more time was because of this demand, right? It had a reason to mitigate that demand POI. And once we did that, bro, we were fully convinced this was the Model 1 accumulation and we're not going to come lower than that point. And that also extremely helped us with finding the entry here because we were already so confident that this was going to be the low of this range. And that is on the August or the 4th of August, which is this move on width, right? Which is this move on width. And what you'll see, right? What you'll see is that instead of extending your market structure right here, making lower highs and lower lows, even though this looks 100 times better, I fully agree. When you're that confident in BTC having its pivot point put in chart and that you're just going to get a higher low from there and go higher, you can kind of skip that last market structure pool and start your range one pool earlier from here, right? Where this is the range that we're talking about. And then even though it is not nice at all, right? Even though it looks ugly, this would then be your range low, and that will be your deviation. And that's also the reason why price did not come back for that low, because it didn't have to. There was already a massive liquidity sweep. This was the biggest liquidity sweep of them all. I don't know if you see, look at this. Look at the volume spike. This was the biggest liquidation ever. So price, why would price have to come back to that low again? Right? It's like this is not a liquidity point. You want to sweep your range low because the range low is a liquidity point. This is not a liquidity point. This low swept all the liquidity. There's a big difference in the low being a liquidity point and a low sweeping all the liquidity. This was just the low. This low swept all the liquidity. So that's the reason why price did not come back for it. And you can validate then the schematic by drawing your range from one pivot point and one swing low earlier, where you have the one, you have the two. And then this was indeed a valid three, right? Now, the way you came up after putting in that three is absolutely ugly, because I think it was literally like trendline liquidity. Yeah, it was trendline liquidity. So I'm not saying it's pretty at all. I'm saying it helps with the bias of saying, hey, this can be a potential model too. And the reason why I was kind of looking at this from this POV and why I took notes going forward is because Pepe pulled off the exact same move. And Pepe, I was aware of the potential. I was truly struggling with Pepe a bit. I think it's like 1,000, no? 1,000 Pepe? Yeah. So with Pepe, I was also struggling a bit as to how I was going to interpretate this chart, because initially I had the exact same. I used this range as or this pivot point as my range starting point. But you can see it's the exact same story as with right here. So we never had an accumulation if I use my range like this. However, it is technically valid to use your range like this, because if you use your deviation to, this is in the deviation limit, right? So it's still a valid deviation. And then from there, you can actually see that you have the one, you have the two, you have the three, where that three had its own little accumulation. And that's actually the one you were also being focused on. So instead of calling this an internal accumulation, it was basically part of a bigger accumulation model. Where the third tab had its own little accumulation. And then you have the beauty of price having that first expansion, rejecting from supply, which is completely normal. Like now it becomes all familiar to you, right? You have an accumulation, you have an aggressive move up after the accumulation, you reject from supply, you're leaving massive buy side liquidity behind. Like if you saw this on the 1 minute time frame, you would 100% watch to see where that market maker demand zone is to find a long on the breaker structure, right? And that's what happened right here. Like if you saw it on the lower time frame, you're like, I'm going to long a breaker structure. And then when you actually combine that with the fact that instead of just a breaker structure, price was setting itself up for a valid PO3, where you have the range, you have the manipulation, and then what followed was the expansion, which is something I literally posted before it happened right here.
This guy's
things
cooking.
become things become more clear, because then you can target this range high. The problem is, when I was initially watching the PO3, it's like you're watching a PO3, but you don't know where you are at on the chart. So it feels awkward, right? It feels awkward. But if you were, if you understood this part, just this beginning part, you would have way more conviction into that long. And it would also make way more sense for this distribution, because you just know where you are at. You're like, yes, we can sweep all this liquidity. I posted about I posted about this liquidity trill, and are we really going to get there? But because I didn't know and I didn't understood this, because it was just ugly, but it is valid, but it is ugly, right? It was harder to confirm this idea as well, because if this was a picture perfect accumulation model and I would see the distribution here, I would immediately tell you that, hey, we can have a distribution where the sole purpose of the distribution is to sweep all sell side liquidity, hit market maker demand, and go higher. I would say that the moment I seen the distribution, I would be very convinced that we're going to have that extended move down. But just because this wasn't good looking, everything was a bit of a sketchy situation regarding the high time frame setups. We were nailing the low time frame. I just didn't know what to do with the follow through per se, because I didn't know how to build the context properly. But now I have taken notes because I'm like, okay, if I'm convinced that there's a pivot point on Bitcoin, which is going to be D-low, I'm seeing this massive flash crash on my altcoins that have that massive liquidation volume spike. Even though this looks ugly and this looks way better as a market structure pool, I'm going to look at it from a range perspective, and we can watch for potential accumulations in there that are part of the bigger schematic. So it's truly something I have noted down. Like I've literally noted it down, and we can potentially take that with us into the future, because maybe we're going to get the exact same, but the other way around at the tops, right? Could definitely happen where you have a massive spike on massive volume where people get trapped and price never gets higher than that point. It comes close, right? It comes close. Let's say this was reversed. We can literally reverse this entire thing right now. We can reverse this entire thing. And you're like, maybe we're going to have a massive buying spike on the high time frame. And there are a lot of trap traders there who are never going to cash out break even. And we're going to dump down from there. Even though it doesn't look like the prettiest distribution, it could still be one. So taking those notes with me into the future to just fucking level up. Like it's this cycle is just absorbing as much information as you can. So you just become a goat and you have seen every scenario and your brain is just wired into, okay, if this happens, we can expect this, this, and that. I've seen this before, I've seen that before. And based on that pattern recognition, you make amazing conclusions, right? I'm doing that still. Like your brain should just be a machine that's like absorbing everything and making connections at the same time to make a prediction going forward based on historical data. Like we're just computers here programming it into our minds.
And also, like for the, how do you feel like in any moment of this cycle? How did this range feel like for 7 months? A lot of
Bro.
people think this range was bad because they didn't make money, but if you try to take the lessons from it and the next time that it happens, you know what to do. You know we can range for really long, so we don't gonna call for a breakout, and then you learn from it. What do you think about that?
Oh, bro, this is the first cycle that my eyes have been open to sentiment. I never had any focus on sentiment, and I have to give credits to Sergio Tesla because he was the first guy that I saw talking about sentiment when we were approaching the all-time high. And based on sentiment, he actually made the prediction of a very extended capitulation from a price and a time standpoint, right? And then since then, I've actually been focusing on sentiment, bro. It's it's insane. It's insane. It's so crazy how it always works the exact opposite. And
Yeah,
then looking back, it seems so obvious. Like, yeah, we were trending up for 250 days. We went from 20 to 70K. No, we're not gonna go to a fucking 100K from there. It's like it makes sense to start a range, but if you cannot get yourself out of that impulsive state of mind, take a step back and look at the charts objectively, you're going to stay in that cycle, because trust me, your algorithm is going to be on full on bull posting. I remember him getting 2 likes on that post, bro.
yeah. He was the first one who called it. Sergio
Yeah,
Tesla.
yeah,
Study him.
yeah. First one for sure. And then it's just that instead of people like you had 250 days almost to just level up, gather as much tokens as you can on major discounts, like major discounts. And now people are interested in buying more, you know why
And now
now?
it's difficult. People will always want to be there when the green candles
Like
come. Yeah.
you can literally see it on my chart. I think there's a massive misunderstanding regarding volume, okay? Because even though the only time, okay, The only time where I will be like, if we're moving up and I see high volume, and I'm like, oh yeah, that's very bullish for the breakout, is because we had a very extended reaccumulation model, because it's a institutional push. Okay. So when I see increased volume coming towards the range high, right? Increase in volume, you can see right here all these buying volume spikes. I'm just focused on the buying volume spikes here. If I see that increasing volume in the breakout, I'm like, okay, that's going to be a good breakout. Okay. But on any other project or token, when you're simply going up and your volume becomes extremely high, why do you think the volume becomes that high? It's because right now they're selling again. They're using your buy orders as selling, because you see volume getting extremely high, but price not even going that much higher or going higher at all. Because you want to buy when volume is low and sell when volume is high. That's a massive misunderstanding. Like you can see it here on Pepe, for example, that you want to be buying when the bullish volume spikes are not even visible. Like the lowest was like here, right? This was like one of the lowest in this area. That's when your volume is so just drop dead. And now you can see volume start to increase, right? Now I'm not telling you to sell, because we also swept a lot of liquidity, which is also just, positions getting stopped out, causing a buy trigger being volume. But it's not the time to be buying when the volume is here. It's the time to be buying when the volume is here, right? And trust me, you will not find a token where the volume here that is lower than the volume here equals the price being higher and then the price being lower. No. If you measure the volume that's going up, you will always see price going up with it. And obviously, everyone knows the story about you want to buy low and sell high, which is the most basic thing of is the core foundation of investing, right? But that also equals with volume. You want to buy when the volume is low, because that means price is low, and then you want to sell when the volume is high. Because for the people that may not know this, okay, for the people that may not know this, when price is dumping, okay, let's say this is our support POI right here. Let's say this is our support POI, and price right now is here, okay? And then price is dumping down pretty aggressively, coming in that support POI right here. And then you start doing this. What you will see, okay, probably in this area right here, you'll have high volume spikes, okay? And that's probably high selling volume spikes. They may seem like a buying spike on the higher time frame, but if you truly figure out what exactly was the spike, mostly it's a selling spike, because price ended up coming down afterwards. So the selling pressure was pretty great there. But when a market maker wants to fill his positions, okay, when the market maker wants to fill his positions, they don't market order in, they limit in. Okay, they limit in under your swing pivot points. So they'll start limiting here, and then they'll limit in. They have all these limits here. Okay, all these limits. And these limit orders, they create your accumulation model, right? They create the deviations. The reason why you'll see a selling volume spike is because people are panic selling using a market order, an immediate execution, or when their stop loss gets hit, it's a market sell order if they're long, right? And then see a volume spike, you see the increase in volume spike, but then price doesn't go lower. So you have to ask yourself, if the volume is increasing from the selling perspective, why is price not going lower? Because when they want to accumulate, they use limits, and limits are not particularly shown in volume spikes. Okay, a limit order is like a net that catches you. So you're falling down, and then the net, you fall in the net um, goes deeper and deeper because of the weight of you until it bounces back up. It's absorbing price. It's holding price up with limit orders, limit orders, limit orders until they have the data, until they have the ratio between buyers and sellers correct, and they can start making the pivot point. You know, they have longs, longs, longs. They absorbing price, okay, not particularly on high volume because it's a limit order, right? They're absorbing price when it comes down using limits and then holding price up, and that's getting filled and filled and filled more until they see that they have filled enough positions in order to cause a shock where they can actually push price up with a market order. And then once you actually see the break of structure that may happen somewhere in here, you can see a volume spike. Because now, because they have the ratio correct and they have all the data regarding how much pressure they now need, in order to push price, because with a limit order, they're not pushing price. With a limit order, they're absorbing price. And then once all the price is absorbed, they can push price with a market order, right? So when you know this story and you know this concept, and you see low volume, it's not bad. The project is not dead. If you see the accumulation on low volume, that's amazing. Sometimes you'll see a volume spike on like a deviation because apparently a lot of retail people were long that got liquidated. That also happens, but it doesn't need to happen. Okay. It doesn't need to happen. But they're absorbing price with limits, they're pushing price with markets. And when they have a market order, you'll see a volume spike. So if you kind of backtest this theory, you'll kind of see in a lot of accumulations, you won't see massive volume spikes while accumulating, but then closer to the breakout, you'll see an increase in volume because now they're pushing price. But if you combine this info, when prices are going up, right? When prices are going up, let's use this too. When prices are going up like this, and all of a sudden you're here, and your volume in this area starts to increase massively because you're going up and you're seeing the volume go up, with the information I have just given you, is that a market maker? No, it's not a market maker. It's retail buying the higher prices. They are right now buying. That's why you have high volume spikes. Only in this area and on the beginning of the move up, you can still call it institutional pressure. But what they are doing here is maybe again scaling out with limits. They are absorbing all the buying from retail. So if you see the volumes increase, okay, if you see the volume increase when you're already up and you're up high after accumulation, they're doing probably the exact same playbook like they did here, but now they're doing it here until price comes down again and they do the exact same shit over again. So when you're starting to see your volume increase, it basically means the institutional pump is over, retail is now buying. And then you have to ask yourself, how good is retail? And is retail profitable? Because most of the time it's not. And then you can actually sell. So that's kind of how the game works with the volume. A lot of the theory is all backed in the volume. So don't get too bullish when your volume actually don't get bullish when your volume becomes incredibly high when you're high at or when you're at higher prices.
I like that.
I'm spitting
Oh,
some fucking info here. I'm
crazy.
telling you, people buy people don't understand this, and they sell a course talking about this shit.
Crazy. Bro, XRP is sending. It's not even funny.
Bro, I don't even want to know. XRP has been XRP or XRP. I'm talking Dutch and English.
The,
But bro, I have thrown the biggest fade on XRP ever. Like I'm gonna give you the stage for a moment because I want to share the setup that I shared in the Discord. I'm glad some Discord people took it, but I'm gonna give you the stage because I want to find my call, bro. Totally messed up my own call, bro. But you holy moly. Oh no, you have a different range on your chart. Okay, I thought we were at the actual range height that I use. Okay, okay, my bad. Yeah.
yeah, so this is actually crazy, guys. So on my Twitter, I made this post. Textbook Wyckoff accumulation. Do not fade 300 plus accumulations like this. Scanning with the VIP for an entry. So this was the moment we were here in this range. Now, what did we do? We created our initial range low, initial range high, deviation 1. We literally grabbed extreme liquidity right here. And in this zone, we had a mark structure break back to bullish. So I was literally waiting for this long. I all shared it in advance. And right now, yeah, you are coming to this range high. I'm glad some people in the Discord took it. So shout out to Wa Yuwa. He took the trade and he's up really nice. So he took it with 35 leverage and he's up 350%. So that's actually crazy. But guys, that is showing like our concepts they work. Like it's literally how they fill the positions. And yeah, now you are seeing the effect. So what
Bro,
was your trade?
I have it. I have it. Okay. Ah, this is with pain in my heart, bro. This is with pain in my heart.
Literally waiting for months and then you miss it.
Bro. Yeah, but I missed it. Not even because I missed I was like I put too little like I didn't have the realization of like, yo, I need to long now, now, now. I was just waiting, waiting, waiting right here. So, oh my lord. Like I'm looking at this range, right? The primary points. You also have this internal Wyckoff on your chart. Like there's just Wyckoff everywhere. But
I think they
but
were scaling into positions.
this also has that range inefficiency where like there's no volume here. Like what's gonna hold price back? It's liquidity with no volume. So that should shoot up to 0.95. Not in one like massive green dildo candle, but consistently it should move up to that range high pretty easily. But I traded, like I called and I traded the short setup, right? So we
Yes.
had the one, we had the two, we had the three. You got the model one flowing over in the model two. We found the short exactly here and we took it towards this low. I was so confident in that low being taken. It was like crazy. Okay. So we got that. But from there, I was looking for a long, right? And I was looking for a model two accumulation long. And I literally posted this. Yo, bro. I literally posted right here. XRP high time frame setup, high time frame long setup. I am eyeing the 11th or the 3rd of November, 6:50 p.m. 11th of November or 3rd of November, 6:50 p.m. That's here. Boom. Like we just put in that tab, right? We just put in that tab. I have my entry on the break of structure. So I wanted the break of structure, and then I want to go swing long. And then this target was just the TP1 target, right? From there, we take a TP1 stop loss entry, and we're done. So this was the setup that I was eyeing, which is literally exactly what happened. Exactly what happened. We got the break of structure right here. So looking at your 3 hour structure, you got the break of structure. Boom. Right there. So expectational order flow would be a higher low for a higher high. Is there a reason where price could come lower? Well, the only order block in this entire move up was this 30-minute block here. So this was the this was the ultimate entry. Like you should literally take this trade with like a 10, like depending on your account balance, but I should have taken this with like a 10, 20 grand risk. That massive. Like I would rather lose 10 grand on this trade than miss out on that massive move, bro. 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 47 RR. Oh Lord. I don't even know what I was doing here. I don't even know what I was doing. What timing was that retest? at 11 on a Monday, bro. I probably wasn't even watching the charts anymore, bro.
Bro,
Oh Lord.
just shit, man, that we miss those setups.
Generational. Generational. And you know what's even the worst? Is the fact that I also missed this one right here, which was, we have been talking about this for a longer time. This was also, you had a Model 1 accumulation in that macro third tap, right? Bro, these two entries could have tripled your account balance if you took a 1% risk. Trust me, I'm not taking a 1% risk on these type of trades. I'm taking a 3 to 5. It's
Just on the
absolutely
margin.
disgusting. It's disgusting. But you can just see both, like Wyckoff Insider just said, both entries, right, or both pivot points on the chart are tradable with our models, because our models is not just a strategy, it's what needs to happen before you can have a pump like this. Like you need to get that through your head. You need to have that model before you pump like this. That's why you see it happen all the time before big pumps. It's not a coincidence. It's what needs to happen, because they need to accumulate. They need to have that ratio. Like, I don't exactly know how they do it, but it's just data where they can see sells and buys and the overall pressure in the market of what the ratio is between sell orders and buy orders at every single particular level. And once they flipped all those ratios and they can see that they now are in an oversold market and they're accumulating, they can flip the script and they just have all that data where they know with X amount of pressure from a buying perspective, price is now ready to be pushed up. And then they just execute, man. Then they just execute. 10K risk to 500K. Yeah, that's why I'm crying. I'm not even crying. I'm just numb. I'm like numb.
Bro, the total chart almost hit a new all-time high. Crazy.
Really?
Like the total crypto. Total
I
crypto.
think that's because Bitcoin is so dominant, no?
Yeah, total tree is still lagging.
Yeah. It's just because BTC is that dominant. Oh, oh, almost. So yeah, it's with pain in my heart that I'm not in that XRP long. Here, Tasty, this was me. This was literally me. I'm looking at that XRP because the thing is, right? People were too focused. So we needed Wyckoff Insider to be in the middle, because looking at the XRP setup, um, right here, people were too focused on buying this eeny meeny tiny candle close. They wanted to long here and then have like a refined stop loss here, right? And I'm like, guys, just wait. We're currently in supply, there is resistance above. There's going to be a good entry. And I saved all those people that were trying to find that immediate long, right? Oh, I saved all those people trying to find the immediate long from just being liquidated here, right? Being stopped out. But then I was too cautious, because here I should have max long, right? I should have set a limit order right there, So we needed someone who was like, yo, watch out here, but then someone who was like, yo, full port here.
Literally, man. Oh, this is. I hated that I
Because
missed this one.
if you didn't buy the bounce, right? If you didn't buy the bounce, there was no re-entry, bro. Like this was just going up sideways. This was coming down. Like you could have taken the bets on this ugly one. But then the problem is, like, at that point in time, after you wick that high, to put your stop loss locally here, like to long all the way up there with your stop loss that local, if there was a confirmation there, I wouldn't be that confident in calling for like higher targets without potentially wicking you out again. Like it was just this was just that POI. It was the extreme demand after a break of structure, after a confirmed accumulation model. So with pain in my heart, but God, yo, I can't even find the top, bro.
Uh, just keep
Oh yeah,
sending.
yeah. It would have been the first time that XRP made me crazy money because I remember holding XRP last cycle and I didn't make that much money on it.
No, it was
I was
just
very late.
stable.
I was very late. And since then, it just should have been the stable coin. So yeah.
You see.
Yo, we need like an alarm channel for high time frame setups. I was literally thinking about this today. It's great that you say it. I want to have a separate channel where the swing setups don't get lost into my scalp trades, because I post it all in my crypto channel. Everything regarding crypto, I post in the crypto channel. But then sometimes I have higher time frame setups, also like the Pepe PO3. I think it just gets lost. So um, I'm gonna I'm gonna make an alarm channel for high time frame setups of like, yo, watch this point and then set an alert there so we just never miss out.
That
I
would be
like that
good,
idea a
man.
lot. Like that idea a lot. People agree. So that will definitely happen. What is your win rate? I think my win rate right now is around 80%. And then from the losses that I take, and that's not the flex. That's not even the flex. It's just what it is. You can make a lot of money on a very low win rate because it all comes down to the combination of win rate percentage and risk to reward. The higher the risk to reward, the lower the win rate percentage can be, right? The lower the risk to reward, the higher the win rate percentage needs to be. But you can be profitable on many different combinations. My average risk to reward is around 2.2 on each trade, right? And that's when I'm scalping mostly. I don't really particularly count the high time frame setups because sometimes I go pretty roughly with the risk of those swing setups. But just average day to day trading, it's around 80%. And then the losses that I take are oftentimes minimalized because I try to you know apply proper trade management. But it's just waiting. Like the reason all of the TCT members can have the exact same win rate because I share most of my setups, but at the same time, I just only trade A plus setups. I only trade high probability setups. Like you can ask any TCT community member, no one has seen me take a trade that doesn't have a good return to zone. Like no one has seen me take a trade that doesn't have the flush effect. And there's a reason to it, right? Because I just know those trades work. I know for myself and from reflecting on my behavior that there's some trades where I'm just so confident, and then there's some trades that take years of my lifespan because I'm stressed and my heart is racing. So why would I want to put myself in that position when I know I can just wait for the high probability ones that net me a lot of money?
Double amigo say. Oh, oh.
oh, oh. But now, guys, now it's way harder for me to post a swing setup because we're reaching all-time highs and there's not really like a swing idea. I just posted one swing setup on ETH, by the way, guys. I posted one swing setup on ETH in my channel in the VIP. So send an alert there. Send an alert there. I even put Fred on the chart in that area. So
If you
if
know,
we
you know.
get there, I'm very excited. Oi, oi, oi. I like to keep it moving, moving. Where's my? Oh, I deleted all the. I know, man. I'm gonna try and rock this pepper trade to new all-time highs, bro. Let's
Good hit,
let's see
man.
if this can become. Let's see if this can become an. If this can become a generational long.
Bitcoin. Keep sending though.
My BTC chart is the only chart that's lagging. The price action is that good as lagging. Like the altcoins are totally fine. BTC chart is like it's too big.
What is Solana doing? Is it all-time highs?
Yeah, it's at the daily. This is a daily order block.
Oh, that's a strong one. That's a topping range one.
Yeah, so that's why it's kind of struggling. But in my opinion, you're in my opinion you're tapping it now, so it's out of the way. You know, you're not tapping it to reject. You're tapping it so it's not there anymore when you come back for it. Do you have any last words, brother? We've been going for an hour and 26 minutes. Last subject that you want to discuss before we reach the 90-minute mark.
Yeah, it's just so important to don't get over emotional right now and just stick to the data. So Bitcoin is not bearish right now. We can't even break mark structure, low time mark structure. So no reason to take profit on anything. Uh, the moment we start closing, so if we now take this high and then we start closing below this low, that would be the first major signs of weakness. Of course, we can create like a distribution right here, but just sit on your hands. And when the charts are saying it's time to take profit, we will. But timing wise, and there is just nothing bearish on the chart. So be patient and yeah, learn how to trade so you can make money up and down. And yeah, that's it. Those were my last words.
Yeah, so I see Creed saying, "What's the exit plan regarding memes, guys?" We're not going to give any exit plans right now because it's not the time to be thinking of an exit. You need to let it rip. We just reaccumulated for 230 days, right? When the my exit plan, if you're asking, um, I'm gonna exit when the market tells me to exit. That's my exit plan, right? Yes, I can have
Some
extra
wise words.
variables, but I'm gonna exit when the market tells me to exit. And right now, the market is saying the complete opposite. So if you're trying to catch the exact top, in the middle of a pump, you're setting yourself up for failure. Wait, be patient, and when we have more data, we reassess and we trade the confirmations and then net the expectations, and that's how we make a lot of fucking bread in this crypto cycle game. Okay, guys, so take some time off the charts, get your dopamine levels back to normal, go to the gym, hit a workout, don't be on your phone, and eat some good foods, go to bed, wake up, and then I'll see all the TCT members during London and the New York Open stream. Peace out, guys.
Peace out.